Hello, everybody. So, HIMS just reported earnings, and it was a fantastic year, fantastic 2024, and the outlook for 2025 was just as good. But you wouldn't notice that in the stock because the stock is way down almost 20%, depending on where you look. And it's down because Wall Street is nitpicking on like a few basis points on gap gross margin. What if this is I remember the days when this stock was guiding for a 75% gross margin. Anyways, it doesn't make any sense to me why the stock is down right now. This stock has performed outstandingly. The year-over-year revenue growth for HIMS, now that we have a full year 2025 at a 69% year-over-year revenue growth. Adjusted EBITDA, which is the number I care about on this channel, right? Net income is for paying taxes. It's good. They pay taxes. Good for them. But I care about the best proxy for cash flow, in my view, which is adjusted EBITDA, 177 million. That's up 257% year-over-year. Revenue is up 69%. Adjusted EBITDA is up 257%. What does that tell you? This company is entering operating leverage. They're making even more money as they sell more goods and sell more stuff, and that's a very good position to be in. The number of subscribers, once again, I remember the days where they were guiding for like 1.3 million. I remember when they broke 1 million. They are now at 2.2 million subscribers. Year-over-year growth, 45% in the number of subscribers. And even the average spend, they are now spending 64%. $64. The average subscriber is spending $64 a month on IMS, and that's up 19% year over year. Also, I want to point out the market share, and this is a chart they haven't really detailed too much before, but the market share that they've given us here is amazing. For their segment, for their type of business, they appear to have a 47% market share. You'll note Row Elf, which is a competitor that I often hear a lot of people mention, saying, "Oh, it's a big competitor of HIMS." Row Elf actually is what? Is 11? Is it 11%? Yeah, it's 11%. Roman Health is 11% market share. HIMS is 47% market share. So this is the big player in the space. And if you look at the direction of their market share in that space of telehealth, of meds via these network doctors, if you look at that market share, yeah, that's 47%, but only increasing, and the trend is clear. So are they going to keep increasing their market share? Maybe as some of the others fold or consolidate. So I'm very happy about that. But of course, Wall Street has stolen HIMS from us and has turned it into a GLP1 story. So it's all about GLP1 now, and many people buy the stock because of the GLPs. And if you read the letter, they gave us very interesting information, so we can calculate the share of the GLP revenue. We know the total revenue for 2024 was 1,476 million, and we know that 1,200 million of that was non-GLP. So the GLP revenue is only 276 million out of the 1.5 billion. And if you do that as a percentage, that's actually an 18.6% of the revenue. 18.6%. I'm earning it up to 19, so let's call it 19. 19% of the revenue is GLP-1s. So that is a significant increase compared to Q3, because in Q3, it was about 10% of revenue that was in GLP-1. So quarter over quarter, the GLP-1 business increased something like 80 or 90%. So that's pretty impressive. GLPs are definitely a major tailwind for HIMS. Let's not fool ourselves, right? Next quarter, they will likely break the 25% of revenues mark. It's a major tailwind. It's really helped the story, the narrative. It's really helped a lot of buyers buy into the stock. A lot of people discover HIMS via the weight loss road, and maybe they come to HIMS for a weight loss product, and then they discover that they need an HRT treatment, or they need an ED treatment, air loss treatment. HIMS has gotten a way to recruit more and more people thanks to this GLP-1 platform, and the growth, like I said, 69% year over year sales So in 2024 compared to 2023, and without the GLP tailwind, the sales growth would have been only 43%. And if you remember my videos from more than a year ago, I was expecting something around there, right? Maybe a little more than that, but barely. I was expecting 45%, something like that. So the business other than GLP is growing really well, and GLP on top of that is growing even faster. So this is a business that is firing on all cylinders, as we say. They spend a lot of more time talking about their GLPs and their GLP offering. They seem to believe, and if you look at the price, I believe it too, that they are the cheapest offering of GLP out there, at least among the big player. Their GLP weight loss offering a subscription plan for a yearly price, you're talking about just under $2,000 at $1,980. So that's cheaper than Weight Watchers, cheaper than Henry, cheaper than Noom, cheaper than Row. It's even cheaper for some categories. For example, if you're a first responder, they have a $99 a month plan. A lot of people end up paying between $150 and $200 a month for the GLP-1 offering at HIMSS. They also make a good use of their app, their platform, their app, user-friendly, customer-centric marketing. And so the app increases adherence. And if you compare to a large survey of GLP-1 users, it seems like people stop using GLP-1s after 12 weeks. 42% only keep using GLP-1s after 12 weeks. Only 42% of the population keep using their GLP-1 after 12 weeks. Well, that is not true for HIMSS. For HIMSS, 70% of their customers continue using the GLP-1. And, I would argue a lot of that has to do with the power of their app and the reminders and the healthcare provider follow-up and all of that, notifications. Don't underestimate the power of an app. But there's also the cost, right? Because in the BHI study, you probably have a lot of people who are just actually not quitting, but they're moving away to a cheaper provider of GLP-1. People are more likely to stick to a GLP-1 regimen for the long run if it is affordable, if it is $150 a month. They are less likely to do that if it is a branded medication at $1,800 or $2,000 a month, depending if you're looking at Zepbound or Ozempic. More on weight loss. I know we all want to move on from weight loss, but that's still what Wall Street is looking at. So the weight loss thing. So of course, compounded semaglutide, that's one of the big chunks of a business here. That likely goes away once the OFA versus FDA lawsuit is over. And we don't know when that lawsuit is going to be over. My guess is it's not going to be 2025, maybe 2026. But for now, we know the FDA is not enforcing the not in shortage restriction as long as this lawsuit is going on. So that's point number one. So that part right there is likely going to go away at some point, maybe a year from now, maybe 2 years from now. But the personalized compounded semaglutide is not going to go away. If you can personalize it for health reason, for valid reasons, you can still sell a compounded version of that, and you can bet that they're going to try to find those customers that need a personalized version of the drug. And even if those two aspects don't work, you still have oral-based solution, which is metformin or bupropion. These are the weight loss pills, and a lot of people, they come here, they think they want a GLP-1. They may discuss with a provider and realize that they don't have to have an injection. They can actually just get a pill. And so, of course, HIMSS sells pills as well. But the big deal, of course, is going to be the liraglutide. Liraglutide is coming in the first half. So hopefully next quarter on Q1, when we hear Q1, hopefully we'll hear about liraglutide, which is the generic for Saxenda/Victoza. So they're going to make that own generic. They're going to make the generic because the generic is off patent now. So the only GLP-1 that is off patent is liraglutide, and HIMSS has acquired a facility to manufacture it. So they are going to be a generic drug maker of liraglutide, which is quite outstanding. And of course, people will say, oh, well, liraglutide is not as effective as the other ones. Well, yes, but, if the customer wants a GLP-1, and if it's the only thing they can sell, I still believe they will sell it. And at the end of the day, liraglutide is still a GLP-1. It is still a blockbuster drug. It still has many of the benefits than the newer GLP-1 drugs have. Moving away from the GLPs, moving on to the 2025 priorities. So in 2025, part of the Q4s, and that's a big advantage of listening to Q4s, is they talk about the outlook for the next year. So the outlook for 2025, of course, is that HIMSS wants to strengthen weight loss and the weight loss specialty and be a long-term market leader in weight loss. They are well on their way when you look at that market share. Then you'll notice all four other points are about the legacy business, are about their own business. So labs, we haven't discussed this much on the channel or online because people focus on GLP1s, but the labs are a big deal. Their acquisition of that remote lab company with that lancet that someone puts on their arm and you prick your arm and then a few drops of blood fall in a vial and you take that vial and you mail that vial back to HIMSS and then HIMSS analyzes your blood for you. That's the lab capability. The lab diagnostics is now available to a remote company like HIMSS, and this is going to unlock so many more prescription opportunities, so many more treatment opportunities. I could even see them do primary care one day. Why not? If you have labs, you could do so many things with labs. Now, with the labs, they're going to start, of course, with menopause, with HRT. This has opportunities in so many different areas. Diabetes is, of course, the elephant in the room that they could get into, but there are so many conditions that whenever a practitioner makes a prescription, they need to have labs done before they make that prescription. And so the fact that they have their own lab capabilities now means that they will be able to provide better care on the one hand, but especially more and more care and take more and more of those highly profitable verticals that have been the cash cows of traditional medical offices and traditional healthcare. These cash cows, these easy to serve verticals, easy to disrupt verticals, they're going to be able to be disrupted and be served by HIMSS. And that's why, of course, they're moving into menopause, they're going to move into testosterone replacement, they're going to move into things like sleep apnea, and diabetes, weight loss, there's skin conditions. There's going to be so many different things they're going to be able to do. Then number three, their plan number three, of course, is to improve the personalization, because once you get a medication that is personalized to you, well, A, it works better, and then B, you're less likely to switch away from HIMSS because you have your custom drug. The drug is made to you. It's tailor-made to you, and so you keep reordering it because it's custom. And so that's well into the way of the 21st century marketing and one-to-one marketing. One person, one patient, one drug is the idea. They keep expanding into new specialties and they keep developing on their technological capabilities. You're going to have a full IT stack. Think about that. A full IT stack where the compounding of the drug and the making of the drug is linked to the branding of the drug, is linked to the patient record and the patient data, is linked to the provider data, is linked to the marketing of a company, is linked to the pharmacy, is linked to the shipping, is linked to the app. You're taking a system of current healthcare that is so disaggregated with third parties everywhere that miscommunicate with each other, and you're bringing it on all under one roof, and you build an IT stack where everything is built under one roof. That is the HIMSS vision of healthcare, and they're going to be able to do that and keep investing in that, in my view and in my opinion. Moving on to the 2025 outlook. What's the outlook? So the numbers are outstanding. The outlook is outstanding. So you'll forgive me for using 63% here because they have sandbagged us so many times before. And really, out of all of the sandbag, I remember the days when they had given us this 2025 outlook back in 2023, and they were expecting to do between 1 and 1.3 billion in 2025. Now they tell us, oh, we're not going to do 1.3 billion in 2025. Now they tell us we're going to do 2.4 billion in 2025. So in my numbers, I'm going to say that they are telling us that revenue growth will grow by 63%. It will grow by 63%. That is outstanding. This is a company whose growth is not abating. It is not meeting that wall. It is not meeting that law of large numbers just yet. It's growing at 63%. How is that possible? How many more 50, 60, 70, I remember 90% back in the day. How many more years can you grow at such high numbers? It's unbelievable. Adjusted EBITDA margin 13% is what we're predicting to be. So 320 million. I'm very happy with everything I see here. Don't forget that the long-term goal for them is to have a 30% EBITDA margin and a gross margin in the mid 70s. They're still guiding for that. Wall Street will have its time being upset about the margin while we focus on the bigger opportunity of the business. They're really growing that business and leveraging that business. I want to point out on the chart here, this is the revenue growth chart, so you can see, you can clearly see the pre-GLP1 and the post-GLP1 era. I tried to draw it to you. This business was growing very fast with all of its specialties, ED, hair loss. It was doing very well on all of these anxiety medications, all of that sort of stuff. It was doing very well on all of these. And then GLP-1s came around, and we've had an inflection, we've had an acceleration of the growth with a GLP-1. But when you look at Q4 compared to Q3, all you can see is that the growth has adopted a new rate. It's adopted a new growth rate. This business is now growing faster than it used to be, hence the re-rating we've seen in the stock price. Look also, as the business is growing, and this is despite them spending a lot of money on, say, a Super Bowl ad, etc. If you look at the marketing is now representing only 45% of the revenue. It was 51% of the revenue of 2023. So the marketing spend is trending down. It's going in the right direction. They are now outmaking what they spend in marketing by a wide margin. They're making much more money than what they're spending on marketing and, of course, operations, technology, and R&D. So it's Wall Street will appreciate to see that go down, and of course I appreciate it too, because the revenue growth is impeccable. If the revenue growth was flat and I saw that, I would be like, okay, well, invest more in marketing. But at this point, their marketing is really clearly effective, and so it's a good thing to see. And let me conclude this video before I go to the call and go and listen to the call. Let me conclude this video. So like I said, the market is reacting poorly to this. The stock is trading back in the $41 range, $42 range. I don't know what it is at as I'm recording right now. But at least when I was making this screenshot of my valuation, the stock was at $41. Unbelievable that it dropped back to 41. So when I input the new numbers with a 41 stock price and a 62% revenue growth for the next 12 months and a 79% gross margin and an EBITDA margin of 13%, how much am I paying for that growth, right? Kind of a metric on the channel. Enterprise value over gross profit over revenue growth. How much am I paying? I'm paying a 0.12. So historically, this stock has been just about a 1. Historically, it's been a 10, 0.10. So this stock is only 20% more expensive than what it's historically been on the channel as seen as cheap. So anyways, it's dirt cheap. Remember, we were closing in on a 0.3 when the stock was nearing the $70. We were nearing it on 0.3. Now the stock is back cheap and back inexpensive, and I love these prices absolutely. I have a full position. For me, this is a long-term hold. This is clearly a hold for 2030 and beyond. The rule of 40 on it is outstanding. We're almost at a rule of 80 with a rule of 75. So, of course, they make money and they grow their sales. So I'm off to listening to the conference call. I'm more bullish than ever on this company. So I hope you appreciate this video. This was not investment advice, not financial advice. This is just entertainment. Hoping you were entertained. Please like. Please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.